What just happened with SoFi? While the markets were in chaos, SoFi held its ground better than many expected. But don't be fooled. There's a lot more beneath the surface. From tariff uncertainty to Powell's remarks, and even some intriguing moves in the options market, today's story is more than just a red day on the chart. Let's break it all down. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended the trading day with a loss of 2.56%, which compared to the plunge many other growth stocks experienced was relatively mild. Early in the day, the overall market was trying to make sense of recent developments, including new U.S. tariff hikes and fallout from Nvidia-related news. These factors contributed to a jittery atmosphere, and the market doesn't do well with uncertainty, especially when it's layered with geopolitical tension. Adding more fuel to the fire, Federal Reserve Chair Jerome Powell addressed the public in the early afternoon. Investors were hopeful he might provide some reassurance, perhaps signal that economic strength could ease inflation concerns or hint at rate cuts. But that's not how it went down. Powell acknowledged the economy is indeed resilient, yet he emphasized that ongoing tariffs could lead to a slowdown and might push inflation higher. More importantly, he stressed the Fed will hold off on any decisions regarding rate cuts until hard data reflects the real impact of these tariffs. In short, no cuts anytime soon. This cautious tone wasn't what investors were hoping to hear. As a result, we saw the markets pull back even further. But interestingly, right near the close, the market staged a small bounce. Why? Because of a bit of mystery. Rumors started swirling about a high-profile guest arriving at the White House around 4:30 p.m. No official names were released, but the buzz alone was enough to stir some late-day optimism. It's truly been a roller coaster. Just when it feels like we might get a break from the drama, another wave hits. With the next trading day being the last of the week, attention will likely turn toward ongoing negotiations between the U.S. and China, as well as earnings from major players like Netflix. That could inject either a dose of confidence or more uncertainty, depends on how it unfolds. As for today, SoFi wasn't impacted by any specific company news. There were no fresh filings with the SEC and no official press releases. The dip was mostly in response to the broader market's downturn. Interestingly, short sellers remained largely inactive, no aggressive moves, no massive covering, just a quiet increase of 171,000 shorted shares. That brings the total short interest to 12.95% of the free float, or about 139.52 million shares. So nothing wild on that front either. When we look at the options data, the total volume today was made up of 6.81 million in calls and 5.29 million in puts. What stands out is that 53% of these options trades leaned bearish. That gives us a good idea of current sentiment. That type of activity hints at institutions adjusting their positions quickly, possibly in response to the developing White House news. A deeper dive into the options trades reveals that $25 call contracts were sold with an expiration date of June 18, 2026. That's quite a distant expiry, suggesting a long-term bearish outlook paired with a strategy to collect premium in the short term. It could be profit locking, it could be hedging, but either way, it's an intriguing move worth keeping an eye on. Now, of the bullish bets placed today, many were targeting SoFi to trade above $11.50, while bearish positions aim for prices below $10. As we head into the final trading session of the week, some key strike prices to watch are $10 with 9,000 open interest, $10.50 with 5,000, and $11 with 15,000. These levels could act as magnets or barriers, depending on market sentiment and volume. Also worth noting, there were several dark pool trades above 100,000. These included a pair of identical trades totaling around 1.5 million shares each, executed at exactly the same timestamp. That kind of synchronization almost always points to institutional activity. While the motive isn't crystal clear, the timing suggests it might be related to the political chatter or even strategic accumulation ahead of potential news. Despite everything, SoFi closed the day at $10.66, bouncing between support and resistance levels. The high of the day was $10.90, brushing up against a known technical resistance point. Tomorrow, if the price can move above $10.91, that could trigger a minor rally. On the downside, $9.96 stands as strong support. If price dips below that, we could see more selling. No major headlines hit the wire about SoFi specifically. Most investors are just waiting. Waiting to see how tariffs play out, waiting for the next earnings report, and waiting to see how the macroeconomic story unfolds. It's a tense time, and patience is the name of the game. All in all, while SoFi didn't have a blockbuster day, it also didn't fall apart like many others. For long-term believers, days like this are opportunities. When chaos takes over, price is often detached from fundamentals, and that's where deals can be found. If you're confident in SoFi's future, this could be a time to double down. Of course, do your own research. Powell also made it clear, volatility isn't going away. The market will continue to swing based on news, rumors, earnings, and politics. It's not ideal for short-term traders, but for those with a longer view, it's a golden age of discounted entries. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.